In this video, we are going to go through an inventory and cost of goods sold practice exercise. So what I have here, first of all, is a variety of entries or transactions that have occurred related to inventory. So we have a beginning balance, we have two purchases, a sale, two more purchases, another sale, purchase, and a sale. So a variety of different things going on here. As you can see, the cost per unit when we purchase them has been going up quite significantly, a little bit more than is realistic, but it'll prove a point as far as the difference in the methods. The sales price, just as a tip, has nothing to do with the cost. It's going to be significantly higher, otherwise the company wouldn't make a profit. So we're going to answer a few questions that don't matter, that don't relate to what method it uses, FIFO, LIFO, weighted average, anything like that. And then we're going to go through a variety of questions that do matter as far as what method is being used. So this is just a template that I've put together. Now again, there are a variety of other ways to calculate this. This is the way I like to illustrate it though. So let's go ahead and go through this exercise. By the way, we are, as you can see down here, we're going to be talking about perpetual and periodic for each of the methods. So FIFO perpetual and periodic, LIFO perpetual and periodic, weighted average perpetual and periodic as well. What we're going to be doing is looking at the cost of goods sold for each of the entries, each of the sale entries, and then we're going to be looking at whatever's left is ending inventory. Finally, we'll have a summary at the very end showing all three of the methods with really all six methods. 3 methods times 2 accounting systems. So first of all, we have some questions that again they're not differentiated based on whether or not they're using FIFO or LIFO. So A, how many units were available for sale throughout the year? And by the way, before we even do this, I want to, if you've taken any of the other videos that I've put together on inventory, you'll be familiar with this following formula. This may help to illustrate some of these exercises as we go through. So our inventory, we start off with beginning inventory, plus we add in purchases. This gives us the cost of goods available for sale. Now from that, we have all these goods available for sale throughout the year. At the end of the year, those goods are in one place or another. They're either on our ending inventory, or they have been sold. So what we usually do is from cost of goods available for sale, we subtract out the ending inventory that we can actually count, and that leaves us with what the cost of goods sold are. You can easily flip these two around. You can subtract the cost of goods sold, and you'll get ending inventory. That just shows that those goods that were available for sale are in one place or another. So that might help to explain some of what we're doing down here. So A, how many units were available for sale throughout the year? When we're doing this, we don't really care about what was sold. We want to know how many units could we have sold throughout the year? How many units did we ever have? This is just the number of units, so we can just sum up all of these, the beginning balance and all of the purchases, and we end up with a sum of 950 units. And if you scan through that, that seems about right. 950 units. Now the question is, what was the total value of all goods available for sale throughout the year? So now we have to take the price into consideration as well. We have the units, we have the cost per unit for each layer. So I'm just going to multiply each of those. I'm going to subtract out these sales. We don't want those. So I now have a value for each layer. And again, if you sum it up, you come up with 4487.50. So C, how many physical units were sold? These are just the sales. We have 725 units, if you look at the sum, that were sold. We had 950 we could have sold. We did sell 725. That tells us the other 225 must be in physical inventory. So we can answer all of these questions without even knowing whether they're using FIFO, LIFO, or whatever. We can also answer E without knowing what method they are using. What is the total sales value for all three sales? We have a units, we have a price. Now this is not a cost, it's a price. So it's the price we're selling it for. So I'm just going to drag those down here. 150 times 775, 225 times 825, and 350 and 850. $8.50. So we can add up the number of units. And again, we're going to have to multiply the number of units multiplied by the sales price. Just drag that formula down to all three layers. And then we'll do a sum of those three layers. So 59.93.75. Not, it's a little bit short of 6,000. So we can answer all of those questions before we even start in FIFO, LIFO, or weighted average. So what that tells you is these are going to be the same under those methods. Now we get into the specific methods. We're going to be looking for cost of goods sold, and we're going to look for the cost of goods sold for each individual sale, and we're going to look for the ending inventory under that same method. So let me go up. What we're going to do here, the easiest way, the way I like to do it, is we're going to go ahead and copy the layer, what layers we actually have. We're going to paste that over here. I'll reformat it a bit. Because when we use these inventory layers, what we're doing is we have to figure out in many cases, actually in all cases here, which order do we go in? So which units do we use up first? Now we don't really need the sales in this case. Well, let's just leave them in there for now. But what we need to know is what units we have. So on the 225.17 sale, we need to know how many units we have to use. How many units do we need? So what we're doing in this particular template, the yellow here reflects the sales. The gray is going to be the cost of goods sold. So again, for this sale, we're selling 150 units at $7.75 per unit. So the total sale is $11.62.50. Now that's all by itself. We're more concerned with the cost. Now the difference between FIFO, LIFO, and weighted average is how do we determine which of these units we pull? In a perfect world, we would either not have price changes at all, so every unit costs the same, or we'd have plenty in a particular layer to pull from. But in a more textbook and a more classic example, we have to pull these 150 units. Since it's FIFO, which is first in, first out, that means we start with the first units available at that time. So what I'm going to do here, we need 150. The first layer is only 100. So we're going to use that whole layer up. It's $3.50 per unit. Oops. Let's multiply those together. And the reason I copy that over here is now we can zero that out. We don't have anything left there. We need 50 more units, and we can get them all from this second layer. And that was $4 per unit. So we took 50 out of there. That means we have 75 left. Again, the reason I do this on the side is that then you can tell what do you have left for your next layer. So what we can do here, if we just look at that one sale, I'm going to add the two costs of goods sold up together over here. We have $550 cost of goods sold for the 150 units that we used. We sold it for $1162.50, so that's a pretty decent profit margin there. Let's go down to the 410 sale. We need to sell 225 units at $8.25 per unit, so $1856.25. Again, we're using FIFO Perpetual. We're using FIFO, so what we start at the beginning, we have 75 units left in this 131.17 layer. We'll go ahead and use those up at the $4 per unit. So I'm going to zero that out. We still need the 150 units to get to 225. So we need 150. We can get them all from this next layer. And that was $4.50 per unit. So again, we needed 150, so now we have 225 total. We got that 150 out of this 250 unit layer, so we only have 100 left in that layer. Now we're down to the 430 layer. We need to sell 350 units. We're selling them at $8.50 a piece. Oh, by the way, before we go down to this one, to mimic what we did up above, let's calculate the total cost of goods sold for those two. For that sale of 225 units that we sold for $1856, it cost us $975 for those units. So now we're down here at the 430 sale. We're selling 350 units. We're still in LIFO, so we start at the very top. Here we have 100 units left in this layer. So we'll use those 100 at $4.50 a piece. That leaves us with 0 in that layer. We need 250 more. Unfortunately, the next layer, keep in mind you have to skip the sale, the next layer gives us the 250 we need at $5 per unit. So we took 250 out of that 300 unit layer, leaving us with 50 in that layer. Again, like we did above, we could add these two costs of goods sold together. We had 350 units sold for $29.75. It cost us $1,700 for that. So now down here, what I was really looking for, I know the template doesn't really illustrate this all that well, but I was looking for the total cost of goods sold, because that's our main concern here. So I'm just going to add up our three subtotals on the side. And remember, we sold, you can just use the sales quantity here. We sold 725 units, and it cost us $32.25. If you look back up above, we know we did sell 725 units for a total of $59.93.75. The cost was $32.25. So with ending inventory, we have a couple of different ways of doing this. First of all, let's go take a look at the quantity. We add the layers we have left. We don't include the sales, just the 3 layers we have left. It's 225 units left. So let's go back up above. It said how many physical units are in ending inventory. There should have been 225, so we are right on track. But we want cost. So what we would do there is take a look at we'd have to multiply the remaining units by their corresponding cost. And you end up with $1262.50. So that's the answer for the ending inventory, but it's very important to know that if we add up cost of goods sold and this ending inventory figure, it doesn't matter what method we use, here we come up with $4487.50, which has to match the total goods available for sale throughout the year. We said those goods are in one place or another. They're either in cost of goods sold or they're in ending inventory. There's no exception. Now the good news, I'm going to mention this really quickly. FIFO perpetual and FIFO periodic result in the exact same responses. The reason for that, the only difference between perpetual and periodic, with perpetual, we take a look at only what is available at that time, at that point in the inventory by that sale. So just jumping back up here. At the sale of 150 units, we only have these 3 layers. So we could not have possibly looked at these other layers below it. That's periodic. Perpetual, what you're saying is we're not doing any of the calculations until the very end. And at that point, we know every layer we ever had. So we'll apply FIFO or LIFO based on that. The reason it's no different under periodic is that your first layer under perpetual is still going to be your first layer under periodic. It doesn't change. You'll be working your way from the very top all the way down. It does not change. So with that in mind, just to shortcut it here to save time, there is no difference between perpetual and periodic. The answers are identical. Now I want to show you the difference will come into play with LIFO and weighted average. So we will calculate those separately. So what we're going to do there, just as we did before, in fact, I'm going to keep the multiplication as well. We're going to actually copy our inventory layer down here. So now we're under LIFO perpetual. So again, we have to, with perpetual, we can only rely on the units we had at that point. So let's take a look. On 225, we need to sell 150 units at $7.75 per unit. So our sales are $11.62.50. Now here's where the difference comes into play. With LIFO, we look at the last unit and we start pulling from there. But with perpetual, our last unit is right here because we can only take a look at what we had when we made the sale. We can't look at 415 because that doesn't even exist yet. Under perpetual, our last layer would be 215. However, as we'll see in a bit, under LIFO periodic, we look at the absolute last layer altogether because we won't be doing any of these calculations until the end of the year. At that point, we know what our absolute last layer is. That's why LIFO, perpetual, and periodic will be different. So let's go ahead and take a look. We need 150 units. Fortunately, our last layer, the one we're going to use first, it has 250. So we only need 150 of them at $4.50 per unit. And we've used up 150 of these 250, so we're down to 100. We don't need a second line. We've already covered everything. And again, as you can see, the sale of $11.62.50 cost us $6.75. Now we need 225 units for the 410 sale. We're selling them at $8.25 per unit. So now at 410, we started on this 215 layer. We didn't quite close it out. But now on 410, we have a different last layer. Now our last layer is the 331.17 purchase. So we're going to start there. 75 units at $5.50. Pulling those over, but we still need 150 more. We can get, oh, by the way, we'll zero this out because we used it. We can get 150 out of this 300 unit layer for $5 a piece. So we need 150 of them. We used them. We're down to 150 remaining. Our cost of goods sold there for the 1856.25 sale, it cost us $11.62.50. Now we're at the 430 sale. 350 units at $8.50 a piece gives you $29.75. Again, we have a new last layer, 415. We now have 100 units there we can use up at $6 per unit, $600. We zero this out, we've used it up. The next to last layer was already closed out, so we go back to the 310 purchase. We need 250 more units. We've only got 150 there, so we're going to use them. We're going to close it out. But again, we're not done. We only have 250 units. We need 350. We're going to need to add another line here. We're just going to shift the cells down. Just copy that over here. So now we're going back up to the next to the last layer, which is this 100 units, and that's exactly what we need. 100 units at 450, so we can zero that out. Our total cost of goods sold for the $29.75 price was $1,800 cost. So again, we're going to take a look at how many units we sold and what the overall cost was. I'm just adding up these subtotals. That same 725 units that we sold under FIFO, now it costs us $36.37.50 as opposed to the lower $32.25 back under FIFO. So the ending inventory, again, it's the same number. It's going to be, what did we say we had total? We have 950 units total. We sold 725, so we're going to have 225 units sold. But let's take a look at the ending inventory that's left. If you sum up all that's left, it's basically the 850, 500 and 350. So let's go ahead and add up cost of goods sold and the ending inventory. And as you can imagine, we get $4487.50, which was exactly what our total cost of goods available for sale was. So we're good to go there as well. So now let's take a look at LIFO periodic. It is different. We're still starting from the last layer, but it's the absolute last layer rather than just the last layer at that time. So I'm just copying over the data set again so we can work with it. For sale 1, we're selling 150 units at $775. And now, again, with LIFO periodic, we start with the absolute last layer. It doesn't matter when the sale took place. So we're going to start with the 415.17 purchase. We have 100 units there that cost us $6 a piece. We're going to use those up, but we still need 50 more, which will come out of this 331 layer at $5.50 a piece. So we only have 25 left in that layer. Our 410 sale, we sold 225 units at $825. 225 at $825. So, again, we're starting with the last layer available that has something. It's this 25 units at $5.50 per unit. $137.50. We've used that up. We still need 200. There are 300 in the next layer, so we're going to use the 200 out of that. 200 times $5 is obviously 1,000. That leaves us with only 100 there. So we have our 225 units. We're good to go. By the way, I forgot to add up the cost of goods sold. There, we're good to go there. Let's see, the 430 sale was 350 units at $8.50 per unit. Again, we're starting with the last layer available, which now we have 100 units at $5 per unit. So we can zero that out. And we still need 250, and lo and behold, the next to last layer has 250, so we'll clear that out at $4.50 per unit. And that gets zeroed out. And again, we'll add up the number of units sold. And the corresponding costs for all those units. So what I was saying earlier is that LIFO perpetual and LIFO periodic aren't always going to be the same. In some cases, however, the way it works out, they may be. The reason is we still ended up using everything but these last two layers. Therefore, overall, we ended up using the same cost, the same number of units. But if you take a look individually, let's look at each sale. The 225 sale only cost us $675 under perpetual, but it cost us $875 under periodic. The 410 sale cost us $1162 under perpetual, but $1137 under periodic. And the last sale cost us $1,800 under perpetual, $1,625 under periodic. When you add them all up, in this case you did get the same amount, which obviously means that we're still having $850 left in ending inventory, and it'll still equal the $4487.50 that we expect when we add the two together. So it's somewhat coincidental. It just depends on how the project or how the layers work out. If you have more layers that you leave partially opened throughout, then you're going to have a difference generally between perpetual and periodic. But in this case, it worked out to be the same. So now we're going to see weighted average, perpetual, and periodic. So with weighted average, we're going to do the same thing. We're going to copy down the overall data set. So we still have the same sale. We're doing perpetual first, so that considers what we have at that point of sale. So perpetual first, we are selling 150 units at $775 per unit. Now what we need to do with weighted average, the whole point of that method, we're not using individual layers. Instead, we're getting a weighted average cost per unit based on all layers available at that time. So it's a cost per unit. So let's go ahead and add up these three layers that we have available at that time. We have a total cost of inventory right now of $1,975, and that is for 475 units. So the weighted average cost per unit there is $416 per unit, which if you look at the cost of the three layers, that sounds about right. It's in the right ballpark. It's skewed a little bit toward this high end because there are more of those high end units. So the $416 now becomes our cost per unit. And we need to sell 150 of them. We have 624. That is all we need to do there. There's no second layer. We have one layer of 150 units at that weighted average cost per unit. Now the trick to this is figuring out, so what does that mean with what we have left? What it essentially means is our cost is now 416 per unit. We've essentially destroyed these three layers and created a new layer of 416 per unit. Now, first of all, we have to figure out how many of those units do we have left. We had 150 that we sold out of the 475. So we have 325 left. So what I'm going to do, so 325 left at 416 per unit. So I'll show you what I'm doing here in just a second. What I'm essentially doing is destroying those remaining layers and bringing us back to our remaining 325 units at 416 per unit. So that's essentially what happens is we destroy the original layers and we have one new layer in its place. So I'm just going to call this the new weighted average layer. Now with Perpetual, we do this every time we have a sale. So 410, we have a new sale, 225 units at $8.25 per unit. We need 225 units. So again, we look at the cost we have at that point. So let me make sure this was still our, this is still H times I. This is still our cost for that layer. Here's the cost for these other layers. So our new cost of all the inventory we have at that time is $3264.50, and that relates to 700 units. So our new cost per unit is $466. It's increased because our underlying costs have increased as well. So $466 is our total cost per unit, and we need to sell 225 of those units. So if we had 700 units, we sold 225 of them, that's going to be 475 remaining at 466 per unit. 475 at 466, just like I did before, I'm destroying all previous layers. So now we have another sale. 350 units at $8.50 per unit gives us $29.75. So we have to figure out what units do we have left, or what cost do we have left. $2213.50 plus 600, and that relates to 575 units. Again, we get a cost per unit. In this case, it's $489, a little bit higher yet. And that is for a sale of 350 units. So $1711.50. Now we had 575, we sold 350, which means we should have 225 left at $489 per unit. Oops. So let's take a look at the units sold. And the cost for each of those units. So we end up with $33.84 as far as cost. Now the ending inventory, we have 225 units at $489, which gives us $1,125. So let's go ahead and add those two together. We get $4,484.25. Now, if you look up above, that was supposed to equal $4487.50 it's off by what, $5? Not even that. 44.84. So it's off by $3.25. The reason for that is simply rounding. When you're using the weighted average cost method, you're going to have anywhere from a couple dollars to possibly $10 error. If you see much more than that, then there's something to be worried about. But if you're within about $10, then you're probably on track. So again, that's all due to rounding, not something to be concerned with. You'd want to adjust it ultimately. You'd want to adjust it in one place or the other. And because of the fact that cost of goods sold gets pulled out, what usually happens is in the inventory is where all the rounding gets aggregated. So not a big deal there. Finally, we're going to use the weighted average periodic method. So I'm going to grab the data set again, pull it down for our final time. So with the weighted average cost of goods sold method, we're going to do our first sale first of all. 150 units at $7.75 is $11.62.50. So now the question is, what is our new, how do we calculate the weighted average cost per unit now?